by the law, not governed by the prime rate. So they can set out whatever the rate they like. If they set out too high, people will not borrow from them, but it's too late because by that time, the debt has occurred long time ago. So in reality, if those people they charge 20%, it's only accumulate the number. Very, very little chance they may be able to collect it. We're talking about the debt collection issue. That is your very good questions. So for the bank, they charge whatever they want, but in my opinion, that is only the number. That is only the number on the paper. So be careful. Those banks, they are very risky because on their balance sheet, they have assets, right? Because somebody owed them certain amount of money. That's assets. However, in reality, they cannot collect it. Sooner or later, they must report it as a bad debt and write it off. Mean nothing.
Bond rates also are also market. They're set by the market too, right? Bond rates. That's a question. They don't have anything to do with the prime rate or.
No, for the lender. For the lender, certain kind of the loan they are subject to the prime rate. For example, line of credit. You use a home, equity on your home to borrow the money. That kind of loan subject to the regulation. However, credit card this is very liberal. Credit card rate, every bank is different. So that's so to answer James' questions, what happened to credit card? Because that is called exemption. Or say this is one type of exception. It's not under any regulation. But that's no good for the bank, You just go accumulate the number. That's it. All right. So payment method, okay. Let's use a credit card example, right? If you pay your credit card debt within the cycle, you just pay the balance. You just pay your balance. That's it. Okay, so you pay back your balance. So there's no any interest accumulated at all. However, you may choose just pay the minimum payment. But that's the problem because once you have the balance accumulated, then number one, your credit limit go lower, right? Say for example, you have total 5,000 credit limit, and you use up 500 in certain months. You did not pay back 500. You pay back $100. So right now you owe balance 400 there, and also in the meantime your credit limit go down to 4,600, right? And then you will become the circle and worse and worse. So my personal opinion is never owe credit card balance. That is the worst scenario in my practice in the past few years. Okay, do not owe money to the bank. Well, if you really want to owe, well, we have the way to get out. I will teach you how to do it, but it's not worth it. It's not worth it. All right. So party A borrow the money. I don't know which party you want to play. Okay. $10,000 loan, assuming they trust each other. Initially, there's no credit issue, and A is the lender, B is the borrower. And how about 3 years? How about 5%? I think for private party 5% is way reasonable. Okay, I see 8% very popular, even 10%, even more than the legal limit. 5% annual rate. In order to make everything easy, B pay $500 every year to A. Right? 5% of $10,000. This is $500. Right? Am I right? Yeah. And make the whole thing easy. Okay. The lending day is on the day of the first of the year. So on every year, the last day, more like a bank, more like you have deposit CD, okay? More like B is the bank, A is the depositor, okay? You open out a CD, and it's a 3 years term, but I don't see CD 5%. By the way, been no long time I've not seen the CD provide 5%. Okay, probably 1.2% probably CD, right? Anyway, so this is the way. B pay $500 every year to A, and then after 3 years, after B pay 3 times 500, and the last day of the third year, B pay 500 interest plus 10,000 principal, everything back to A, and then the contract has been totally completed. Okay, this is called interest only. We just make everything easy. All right. So this is called street note. So in the future, if you hear anybody talk about this, that means interest only. No any principal involved. This is very, very common for the private party. So if you reverse, it's just like a CD. Okay? You reverse everything, it's just more like you are the depositor. You are the depositor as a saving account, CD account. You deposit $10,000 to the bank. Bank is B. Even though we say bank borrow the money from you, but it's just like the way it is. All right? Street note. And the other way is more complicated. You will learn this in your finance course. That is called installment. B start to pay A interest plus principal on the monthly basis. And you need to either use the financial calculator or you use the table. Okay, you use the table to calculate the monthly payment. Okay, you can check online your financial instrument or cash value, okay, on your finance book, or in the summer in your financial accounting book. In the back, you can check the cash value table. Okay, this is called annuity cash value. Then you can calculate what is the number you need to use. Okay, what's the number you need to use, and then to calculate what's the monthly payment. So you will see the number, and that number including principal and the interest. You just pay the number, then after 36 payments, everything will become zero. This is called fully amortization. So if you go to online or you download app, you can download app to your cell phone, smartphone, and say, I want to download the amortization table. Usually it's for free. Okay, you just punch the interest rate, you punch the payment, then you'll see the number, and you type the number, you use the number to time your principal, and the result is the monthly payment. Very handy.
You can also use an Excel formula, I think, right?
Yeah, you can. I believe there's a formula there.
I think it's PMT or something.
Yes. But the thing is, you don't carry your Excel with your cell phone. So, I really hope the Microsoft they can develop. I don't know why. For the business strategy, I don't know why they do not convert their Office to the app version. If they can do that, it's amazing. It's amazing. Right now, I hate to carry two things. One is a personal computer because we need to use the office, and then we use the app to do the other thing. I really hope one day, you know, Microsoft they can try to convert their major software, you know, application as an app and make our life a lot easier. Yeah, hopefully.
Actually, there's an Apple box you can download for iPhone.
Okay, but just for the simple function, not the full function.
Oh, you can calculate a lot of things.
Okay, close enough.
Yeah.
How about for the Word? Not yet, huh?
Actually, I use a Windows Phone. And it has
Oh yeah, Windows Phone, yes, of course. Yeah, this is Windows based.
Yeah.
Yeah.
It has a simple Word and Excel.
Yeah.
Yeah, so I can.
I don't know for the business strategy. Okay, this is a side issue. For the business strategy, I think this is a good topic we can study. Which one will win the market? Because right now Android try to bid, you know, but right now the problem is the app function cannot compete with Microsoft. But assuming we got used to Microsoft already, right? So Android try to bid, you know, the Office, and but however the other side is Windows try to bid Android. So I don't know which system will finally. I don't know. I don't have an answer. But right now at this moment we need to carry two devices. You know, if we are not using the Windows Phone, we need to carry two. But my question to you, when you use the Windows smartphone, can it download use the regular Android app?
No.
Right, this is the
The-
problem.
The problem is the Windows Phone has a nicer app and then Android, the Google or iPhone.
So that's my problem because
Yeah.
if I use the Windows Phone, I lose the opportunity to use app. And apps a lot easier to use, and a lot less memory, you know. So that's the dilemma, you know. So this is I don't know, but that's not my issue. But I just give it. There's no legal issue, but for the business strategy, I think sooner or later we'll see the merge, you know. Anyway, download your the app, you know, to your cell phone. You can punch that number easily. In the old day, I taught a lot of finance, real estate finance broker, real estate mortgage agent. Okay, I have a lot of students. So in the old day, when you need to buy the HP financial calculator, it's huge. You cannot carry it. It's a huge booking. But in these days, we're so lucky. Just download everything on app. As I say, you know, in this area, app is much easier than Windows. You don't want to carry the Windows Excel to do that. This is an easy job, right? So, yeah, go ahead.
I saw the article discussion on why the Windows, the Microsoft doesn't have an app for like an Android or iPhone for Apple, because they are thinking to develop their Windows system like a Windows Phone or Windows service tablet. Once if they provide the Word Excel app for Android system, then their Windows system probably
will be
just-
gone.
Yeah, just gone.
Yeah, the Microsoft is
Yeah.
in
So
a
they are
very,
still-
very risky age.
The kind of struggle.
It's more like Apple 20 years ago, you know, when the Apple lose the lawsuit to Windows, you know, right now it's the same thing. I can see Microsoft losing their market to the Android because app is a lot easier to use. Like this kind of function, why should I carry the Excel? I can use a very simple app, just punch the number in the come out. So, but anyway, this is not my business, you know. I just mentioned that. It's a very good topic. We will see the result in a few years. Because if I think it's too late for Apple to for Windows to Microsoft to compete with Google, it's too late. I believe Android already took the market already. You know, it's too late. But anyway, download the app. You know, I may have your homework for today. Okay, because I think this is a benefit for you to download to do the research any kind, the amortization app, free. I'm assuming a lot of free app on the market. Download one or two to your smartphone. You can carry it with you. Then I may give you a assignment, not today in the class. I will send an email to you. And I will only give you very short windows, very short period to answer my questions. So you're better off. You have your app ready. So Peter, when are you going off?
No, March
So should be fine. So I will give you the assignment probably on Monday or Tuesday. So I will give you the period very short. So probably I'll give you the assignment on Tuesday, and you only have 1 day to give me the answer. And the questions should be very reasonable. Say, party A lend the money to party B, and this is the principal, and this is the interest rate, and this is a payment term, and use your app to calculate. I don't want you use Excel, okay? I say use your app on your smartphone to provide me the monthly payment, okay? Then you need to prove me how do you use your smartphone, okay? I don't want to just see the answer, and you probably, I don't know, take a picture or whatever, okay? Say how do you use a smartphone to calculate the assignment. Okay, I think this is very beneficial for you in the future. Anytime if people want to ask you what is the full amortization payment, then you can just punch the number. This is very easy. I think I have that here, so it's for free. Okay. This is called full amortization. In the old day, if we don't even use the financial calculator, we use the table. It's called amortization table. Okay, it's the printing pages. That is also on your textbook for your financial or financial accounting. You will see in the back. Okay. Okay, this is the second method. Okay, so we have a straight note, no any principal payment, and only interest, and versus full payment. Full payment means for each payment include principal and the interest. Think about this. Even though you pay the same amount of money throughout the period, same amount of money, however the combination is different. Can anybody figure out?
You start paying more interest at the beginning.
You are right. Say for example, you are paying 150. I just assuming, okay. You are paying 150 every month from month 1 to number 36. You pay the same amount of money every month. However, the combination is different. In the beginning, 150, probably, I don't know, you pay probably 120 as the interest. All right? Then this combination shift. By the end, you pay 150 still, however, probably reverse. Probably you pay $100 as principal, only $50 as interest. So what is the message here? What is the message here? Apply to your home mortgage. This is a side issue, but it's a legal issue, so I just want to mention to you. You don't necessarily to do it, but what's the message here? Once you pay $2,000 every month, you pay total 360 payments, because usually this is 30 years. So you pay 2,000 all the way from month number 1 to month 360. However, the combination change. At the beginning, you pay 2,000, probably 1,500 applied to interest. By the end, you pay 2,000 totally still, but probably 500 as the interest. So what's the message? Think about this. If I'm talking about the legal issue, what's the legal issue there? When I say legal issue, not necessarily litigation, okay? Nobody gonna sue you, but there's a legal issue. I will mention that probably next week, okay? But I need to give it a hint. Because for next week, we are talking about the taxation. This is a taxation issue. You pay 2,000 for your mortgage. Only the portion of interest you can deduct your income. So for your benefit, if you keep on paying 2,000 total, you rather apply to interest for taxation issue. You rather. Follow me so far? Follow me so far? So you pay 2,000 total for 360 payment, right? However, according to the tax law, only the interest portion you can deduct from your income. So at the beginning, you can deduct more from $2,000. At the end, you pay the same amount, but your deductibility lower and lower and lower. So probably down the road, for your business, for your taxation reason, you would rather refinance. You would rather refinance. Okay, of course, for the finance standpoint, maybe you don't want to. You want to reduce your debt. However, for the tax issue, if you don't have any finance difficulty, for taxation reason, for your business or for your personal deduction, you may consider to do the refinance, because after you do the refinance, everything go back. Everything will go back. You can deduct more portion from your total payment to reduce your tax liability. All right?
Or can we borrow more money?
Or borrow more money, assuming your house going up. But very interesting, okay? To borrow more money only happen to your real property. Only happen to your real property, because in Bay Area is so unique. In Bay Area is so unique. The value, the market price of your real property going up. This is the only assets I can figure out. For the rest of your equipment, they are going down. Right? Depreciation going down. So in order to get the refinance or cash out more money, they're only applicable to your real property.
How about antiques? Antiques.
The problem is how to appraise the market value, because antique is kind of the market is kind of narrow, and only a few brokers they can provide a very trustful price or value appraised. So antique is very, very unusual, but I would say for the regular business, it's not bad idea to invest your assets on the real property. Okay, so it's not unusual for the business to purchase your own office, because assuming the price in this area is always going up. So that piece of assets, piece of the land, real property, may provide you opportunity to get more cash out in the future. So you have double benefit, right? The price going up, you get cash out to do another investment. Number one. Number two, you can deduct, set back everything. You deduct more on your interest. Okay, we'll talk about that. We'll combine different concepts throughout this semester. So hopefully it can make you much more knowledgeable to run your business, how to do. So this course eventually is not really standalone. This course you need to combine with finance, for sure. Combine with your business or your capstone, okay? Combine with your capstone. So I hope, for your final capstone, you can utilize the knowledge you learn from this class. So again, this class is absolutely not standalone. You will use the knowledge from this class, apply to another area. Okay, hopefully help you to do much more better business in the future. So we have an interest only, we have a full amortization, and we have something in between. Say for example, for 3 B only pay $500 by the end of the year, and for the fully amortization, I assuming you must pay at least more than $3,000, like $3,500 every year, in order to meet your full payment, right? So 500, 3,700, in between, that is called partial amortization. It's very, very rare, very, very rare. This is number 3, and then number 4, guess what? It's called negative. Negative. Both parties agree B can just repay less than interest. So not even meet 500 for some reason. Okay, we don't know why. But A just allow B to pay less. Okay, probably higher interest rate or whatever, okay? So for assuming B only paid the $200 will be enough, that is called negative. Guess what? By the end of the third year, B will pay back more than $10,000, the original principal. Of course, because every year the $200 not even fully cover the $500 interest only, right? So there are 4 payments. You can think about that, but I would say more commonly between the private party is the interest only. Okay. I want to jump to number 5. Debt convert to equity. Okay, because this is another issue you can think about that as a final presentation, because this issue link to your finance, also link to your financial accounting course. Okay. Remember on balance sheet, A equal to L plus E, right? So in my example, when you place an order to your vendor, the total amount is $300. Okay. And finally, your vendor just found out there are a lot of opportunity in your business model. They are not specialized in the retail. They're specialized in design, manufacturing, that kind of thing. They are not interested in the retail business. However, in one day they just found out, wow, your business is terrific. So if they can invest a little bit in your business, probably provide a more diversity. They can control a little bit retail scale or retail channel. So they propose to you, hey, you right now you owe our company total balance is $100,000, for example. Okay? How about let's do this? This $100,000, it was account payable from you to me, and from me to you is account receivable. Okay? So this $100,000 on your account is liability. On their account is assets. Alright? Account receivable is assets. Okay? And right now they propose to you, how about we convert this $100,000 from your liability to equity. To equity. The number by itself still the same, $100,000. We keep the number the same. However, on your financial statement, from your standpoint, move from liability to equity. So this is called the debt converted to equity. And for your vendor, still $100,000 still under the assets. Still under the assets. But we have a different rule to talk about that. Because it was changed from the account receivable to property investment. Still under their assets. Okay. So this is one possibility you may see. Which is good news. Which is good news for you. This is what we call M&A. M&A. It's very, very common, right? A few weeks ago, 2 weeks ago, Facebook, they just announced, right? They purchased the WhatsApp, right? How much money did they pay?
19 billion.
13 billion, right?
19.
19 billion.
19 billion, right?
Right.
19B, right?
Yes.
Gosh,
It's
this is a number that you cannot imagine for whole life. You know what? If it is $100 bill, and the people sitting there to count it, it's whole life. There's a whole life job. Okay, you're sitting there, you're just counting the $100 bill. 1, 2, 3. There's a whole life job. You do nothing, whole life to count the money. not mention to spend it. All right. So this anyway, it's called. And the funny thing is the owner of WhatsApp tried to apply the job at Facebook and it was turned down, right?
Rejected.
He was rejected. So this is the best way to revenge. Okay, I got revenge, I got rejected, and you buy my company and you pay more. It's called merge and acquisition. Merge and acquisition. So it's a one type of the merger. Okay, one type, a different way to merge the new business. You can just merge. Say for example, if WhatsApp owe money to Facebook, and the Facebook say, "Oh, how about you do payback? You just convert that to as acquisition, as equity." Okay. So in the business industry, they do this all the time.
So in that example of the 100,000 that was moved from liability to equity.
From B standpoint, okay.
Right.
From liability O to A, move to B's financial statement as equity.
Right, to equity, and so
A becomes part of A's shareholder.
and A receives a promissory note, or
No promissory note. Promissory note is
it's
just
not a debt anymore.
yeah.
So what?
Probably issued we convert the promissory note as a stock, shareholder stock. Yeah, so B will issue the stock certificate to A.
Even if it's not public.
Oh no, we don't talk about public. Public is more complicated.
Yeah. Okay.
If B is public company, it's subject to SEC. It's very complicated. We are talking about purely private.
Mhm.
So I just mentioned, even for the private, for the small business, you can follow the same pattern. Now, this is one of the purpose of this course. We learn everything here, 99%, you will apply as a small business, not public. I don't like public because you need to subject to a lot of regulation. Another thing, you can do it as a private sector, but once you become public, you cannot do it. Everything is subject to approval,
Mhm.
So I would rather do anything as a small scale, more flexible. Okay, we have two subjects. I hope we can cover it. One is FDCPA, Fair, FAIR, Debt Collection Procedure Act, FDCPA. So in the past few years, this is one of my major practice area. And all of a sudden, from year 2007, people came to see me. Say, Mr. Tong, I got a problem, I cannot pay back my credit card. What should I do? And I said two solutions. One, FDCPA, two, bankruptcy. So I will talk about that a little bit. Okay. The message is here. For those people you are sitting here, taking my class, you will never use this. You will never use this, okay? You will try to make more money, not to owe money, okay? You will make more money from this class, not owing money to somebody else. You just know the knowledge. So I will try to answer James' scenario. At the beginning of this class, James just offered one question. He said, one thing is so strange. A guy renting out a house to the tenant, and the tenant owe more than few months rent, unpaid. And the owner tried to collect the unpaid late payment through an agent. So the agent tried to lock out the door and try very hard to collect the money, because this is called due diligence, right? However, you know what happened? The tenant just filed the order to the court and received the TRO, temporary restricted order. What does that mean? If people receive restricted order approval from the court, and the other person must keep away like 500 feet. No more email contact, no more phone contact, of course, no more physical contact. That's called TRO. And that's one of FDCPA. So James say, what happened? How does it make sense? I'm the creditor, I'm the landlord. I just want to collect my money. Then what happened? Right, because the landlord better off studying how to collect the money in the right way. In the United States, everything is subject to the law protection. Even the debtor, even those people they owe money to somebody, they still deserve the protection of the law. Okay? So we better know how to collect the money in the right way, otherwise you may commit some kind of criminal. Few years back, okay, I worked for a debt collect agency. I'm the corporate counsel. And those companies, you can imagine, they are doing the phone call every day. Okay, very nasty, very, very nasty. If they are not nasty, nobody gonna pay back, okay? So nasty. But, again, that kind of business is under the regulation of FDCPA. And at one time, and eventually at more than one time, and our company got sued. Because the debtor, they know the law, and they say, hey, you violate this law. They filed a lawsuit, and not in the local court, in the federal court, because this is a federal law. So if the court agency, they harass the debtor too much, make too many phone calls, exceed the limit of this law, the debtor, if they know how to do it, they will file the lawsuit against the collection company. So I don't know, do I answer James' puzzle? James said, what happened? I'm the owner, I'm the landlord. I just try to collect the money. I'm entitled to collect. But what happened? I'm under the TRO. I cannot do anything. And James probably more interested. What should the landlord do if there were TRO issue by the court? What should be the next? Okay, even though there's TRO, but TRO will not prevent the owner to file the legal litigation. So the next step for the landlord is to hire a lawyer to file the debt collection lawsuit. That's called breach of contract. We mentioned this few weeks ago. Because the tenant breached contract, right? Probably among the others, one of the cause of action is breach contract there. So no more phone call, no more physical, no more nothing, no more knocking the door. Just file the lawsuit. So the resolution is the legal system provides equal opportunity for both parties. Go to see the judge, and each party can tell his or her own story to the judge, and may the judge make a decision. So that's of course James said, wow, it takes time. Yes, it does. But hopefully for this kind of big lawsuit, it takes probably only like 3 months, 6 months, and you will receive the judgment. But the bad thing is, you know what's the bad thing? Even the landlord, try so hard, spend so much money, spend a long time to wait, even receive a really good judgment, but you know what? You cannot enforce it. If the tenant, the debtor, has nothing to pay back, that's it. Judgment good for 10 years. Good for 10 years. Within the 10 years, you still cannot collect the money, bad luck, you just renew it for another 10 years. So hopefully you have a long life. Okay. So, well, James, you are right. It's kind of a burden to become the landlord. So you need to make a decision whether or not you want to get into that situation. All right? Is it worthy? No. I don't know. This is a business judgment.
Even if you do the right thing, you still need to spend some time. As soon as they fail the payment the first time, you still have to go to court, right? And
Yes.
you'll be able to get him out
Yes.
faster, right?
Yesterday I received a phone call from an old lady. It sounds like a very poor lady, okay? She says she has a single home in the East Palo Alto and rented out to a single mom with 2 teenage, and one teenage burned something in the backyard. I'm not quite sure, fired a gun or burned something in the backyard. The other son was very popular to use marijuana. So the neighbor all complained, and this landlord called me, say any way to evict it. I said there's a lot of way, but it's not easy. It takes time. So I'm going to meet her next week. Yeah. So I don't know. Probably I agree. Okay, it's very hassle for the people to.
How long is the process usually to evict somebody?
Evicted 3 months. 3 months.
It's a big
Sometimes if they are
process.
evicted,
3 months process to evict somebody.
yeah, but if you have good luck, once you file the litigation and the notice been delivered to the tenant, if they are very experienced, they have the same experience before, they know they will move out. They will try to avoid the judgment, because once the people receive the eviction order, then it is reported as a public record, and it will ruin their opportunity to rent any other house in the future. So for those people that experience, they don't want to carry this record, so they will move out. But you never know. Some people, they don't care. Okay. So go back to this FDC CPA, same, very similar. More commonly, there's credit card. More commonly is credit card debt. So as I said, those people eventually they try very hard to catch on each payment, but once the bank raised the rate to 29%, how can you pay it back? Almost impossible. That's become negative, right? As I said. So even they try very hard, if the bank raised the rate higher up to like 29%, I would say there's almost no chance. Almost no chance. I don't see any other business model can guarantee 30% annual return. Tough. Okay. So for those people they came to see me, I say, well, we can do 2 things. One is called FDCPA, defense. And number 1, I will write a letter to the lender. I say, stop, harass. We have right. As a debtor say, we can write a letter. On my letter is, I say, I notify the bank. I say, I'm so-and-so, I'm the lawyer, represent Mr. or Mrs. So-and-so, I'm their debt defense lawyer. And more importantly, I say, please, we request you stop any communication. We have such a right. We say stop communication. Doesn't matter how much money we owe you, but stop communication. So no more phone call, no more letter. We can do that. Then once we send out the letter like that, it is up to the bank. They will do 2 things, one way or the other. Guess what? What is more commonly they will do?
They want to negotiate lower rate.
That's one thing, but yes, they may try it, but you know what? More commonly, they will forgive the debt. They will forgive. They will say, forget it. Forget it. Too much hassle for us to go after you. They just write it off. Let me give you the percentage. It's more like 50 to 60%. They just forgive. But I will not recommend you to do that, okay? Because it's gonna ruin your credit history, okay? Don't do that. And from the standpoint of the bank, that is the easiest way. Because from their standpoint, that's called bad debt. Bad debt becomes expenses. If you want to put in more people, more financial resource to chase, to go after the debtor, it may cost more. So from the standpoint of the creditor, from the bank, the easiest way is just write it off. But it's not good for my client, not necessarily good thing for my client. 2 things. Number 1, they will carry this record for up to 5 years. Any people check their credit report, you will see debt forgiven, see this, and see the number there. And number 2 is even worse. You know what happened? Once the debt be forgiven, that amount of money will become debtor's gross income. You never imagine that, huh? If, say, you are forgiven by the bank for $10,000 debt, the bank will issue you 1099-C, C means cancellation. 1099 is the income report, okay? The bank will report to the IRS, say, hey, this guy owe me $10,000, but I forgive. So for me, it's lost, but for this person, it's income. Oh my gosh. Oh my gosh. Of course. There is the tax law to waive the income tax, but it's more complicated, right? You need to explain to the IRS. So even though I received 1099-C, but under what regulation I don't need to report as income. It's amazing. It's so amazing. Very complicated. So this is the one way, okay? The bank choose to forgive.